Ladies and gentlemen, welcome to another episode of the JK Show. And today we're going to talk about money, graced by our special guest, Dean Ogot. He is a co-founder and a portfolio manager of the Lynn and Jade Capital Group. I know money is a very uncomfortable topic, but just give it a moment today and let's see what happens. Maybe this conversation will spark something in you that will help you look at money from a very different way. So, over to you, Dean.
Well, thank you for having me today, Jasper.
Welcome.
It was my pleasure to be here today. This is not only a man that inspires growth within myself, but someone I see as a role model moving forward. So thank you for having me today.
You're welcome.
When it comes to concepts about money, I find that there's two branches. There's people who are happy with their money, and I want to talk to those people about what makes you so happy. What did you do to get in this happy state? And then there's people who are unhappy about their money. People who want more is the most often scenario, but there are people who are unhappy with what their money is currently doing, and those people I love to talk to.
Well, so growing up, did you ever envision that you'll be somewhere within the finance world? How was life growing up? What was your favorite subjects in school? Just share a bit about yourself.
Well, my story starts, of course, in Nairobi, Kenya. At the age of 7 years old, my parents dropped the secret on me that we would be moving to these United States.
Yeah.
And like any child, when your parents share a big secret like that, it's don't tell anybody, we have a flight in 6 months.
Yeah.
The next day, I had told the whole town. Everyone knew and everyone came asking and they checked in on us and wanted to see if there was anything that we were leaving behind or anything that we could do to pass messages on to their friends and cousins. And before they even knew which state we had come to, we had 3 different things we had to do in Texas, 3 things in Minnesota, and a couple things in Florida as well. So that was my life growing up. But when I moved over to the United States, I grew up influenced heavily by my parents.
Yeah.
My mom, of course, being a medical professional, has continued that path and now finds herself as a doctor of nursing here in the UNC health system.
Yeah.
But my dad had always worked in the accounting world, and I did not follow at first. Mm-hmm. We started with my mom's side of things, where initially, if you had talked to me 5 years ago, you would have known that this was to be Dean the doctor. I was someone who found my future in medicine. It's originally orthopedic medicine. I love to work with my hands, and orthopedics was a chance to not only see the body, but get to make modifications, work with bone saws, help with hip replacements, knee replacements. Yeah. So it was a place I would love to be. But as I grew older, I found a distaste with the medical system, especially around the time during the pandemic. Now, luckily for me, global pandemics are one-off events, so you really have to buckle down, focus on what you're doing, and find a passion. And I came out of the pandemic with a focus on, how our world works and how money becomes the lifeblood of how our world works. And so I kept exploring my interest, and it's led to a path of here today.
Yeah, like any other immigrant, I'm sure there are certain challenges that you may have faced during your transition, of course, from Kenya to the United States. Mm-hmm. How was that for you? Was it easy to adjust to the new way of learning, new way of living? How did you acclimate yourself to the American culture in general?
I think when it comes to acclimating to the American culture, what you have to do is spend as little time in your house as possible. And whether this is silly little things like going to the park, because the first thing that identifies you in America is not your skin tone or not physically. America is the land where everyone looks so different. If I was anywhere in the world, you can expect to see people of, one ethnic group, one skin tone really. But America, what differentiates you is your accent. Yeah. As soon as they hear you, they know where you're from. And even within America itself has a myriad of accents. Mm-hmm. So acclimation for me was nice because I had school every day. And outside of school, I got heavily involved in sports. If you see me on any weekend, I can tell you the score of any Chelsea game. Yeah. If you see me on any weekend, I can tell you, what NFL team. You know, why my coach is a disappointment to me this week, and maybe praising his name another week.
Yeah.
And to continue with this, your acclamation comes from your activity and your involvement. And from there, you'll find people who want to know more. So there's always the tales of you as an immigrant.
Yeah.
But you'll learn your society and learn where you fit in. And that makes it a whole lot easier.
Yeah. Well, that's incredible. I mean, for me, I would say I had a fairly easy transition because, of course, my parent was already here. So having people to support you, people to show you the way was like the best way for me to get into the system. So back in 2022, I remember we had a conversation somewhere, and I didn't really understand money from that perspective. You know, from our parents or from our grandparents' perspective, we were always told that if you want to have wealth, you buy land, you invest in, property, real estate, you invest in all of this. But I didn't know anything to do with with stock market, And I remember us having this conversation somewhere, and that night I really thought about it. I'm like, what is it about this stock market that makes it such a glorious thing? It's at the time when I heard about Bitcoins and all these things, and people are complaining that Bitcoin was going down and someone saying it was going up. So leading to that conversation, I happened to have enrolled to your financial literacy class. That was back in 2022. And there's a lot actually that I learned during that period. I learned about how to manage portfolios and things of that nature. Maybe could you give us a bit of history? How did you get to a point where you decided to invest in stocks, and even just tell us a bit about how Lynn and Jade group started?
Well, it all starts with the day a young man sits down and realizes, wow, the bank of mom and dad is quickly closing their credit line, and I need to pay for things myself now. And as a full-time college student, I found myself with, well, I could go down to the local grocery store and I could start bagging groceries and, study for class, come back after class, put my hands to work. Or, as I was a little bit earlier during this time, this was about 2019 or so, when I was starting to hear about things such as Bitcoin and such. My first interaction with cryptocurrency was I helped a student with his tutoring, and he offered to pay me in a cryptocurrency. I laughed in his face. What do you mean? If I would much rather prefer the $20 bill, because the $20 bill I know can not only put the milk I want in my fridge down today, but will also let me afford the Uber to go see my friends later on. So that was my first exposure to, the world of assets. After that, I took some time, I enjoyed my weekend with my friends because that was my main priority at the time. But I came back and I looked at, what are these assets? Cryptocurrency seemed way too strange for me. I didn't like the idea of a coin and things and such, but I looked at stocks. I'd always known stocks through my dad's brief little conversations. He was a man who would ignore all of the local news programming, but when it came to what the Dow Jones, what the S&P 500 did that day, I saw him sit up in his chair and actually pay attention. It used to be back when we got the newspaper delivered at the door, here was my sports and comics sections that I'd run off to and play with. Yeah. But he had his eyes in the industrial news of the day. And so I remembered back and I called him and I say, hey, Dad, where do you get your information about stocks? Yeah. He, of course, led me to the SEC's Edgar filing system. I spent some time in there reading about different companies and their releases and such. And as I got to reading, I would see that, on the day these filings went up, when I went and looked at the stock, I saw 2% up, 2% down. And I calculated that, wow, if I had just bought $20 of that, my $20 would have been $35. And so I got to thinking that, wow, these stocks are event-driven. The day they publish something, this stock did something. And so we got familiar with the publishing, and when a report comes out, the stock moves. So I got on my calendar, in a big wall calendar I had all my tests on, and I started to plot, earnings release here, drug development release here. And I found myself in a niche of what the FDA was doing, because I was a college student, and like most college students, you could struggle to find more than $100 in my pockets at any time. And so I saw that when you develop a drug and you get it cleared by the FDA, oh wow, your stock moved 20-30% at a time. So my professor at one time caught me on the FDA biopharma site. It was a site that he was familiar with because he had once worked in the industry. And we got to talking, and he say, why are you reading up onto that? We're simply looking at carbon chain reactions today. And I came to his office hours and I explained that we had started to find different moves in different stock markets just based on what stage of their clinical trials were releasing. And his eyes lit up because he had been doing the same thing, not only in the past, but he was doing it very passively as a college professor now. And he introduced me to the world of, these are what the clinical trial stages mean. These stage 3 trials are when we will get the most return for our money. And so from there, we developed a partnership of every day after we were done with chemistry class, I'd come into office hours and we'd take a look at the week ahead. Some weeks we had 1 to 2 maybe, but some weeks, I could tell you, we charted a course where we could make double, triple our money just based off the stage 3 announcements that were coming up. So it was here that I started to, find my footing in the market. Find that stocks are, while not tangible, we live in a world that affects the stock market. And if you can put your assets down and correspond to the tangible world around you, well, when you come back for your assets, you may come back to 3-4 times your money. And as a college student, once the bills were paid, me and my friends could have a bit of fun with the extra money. So that was my motivation.
So money was the motivation?
Keeping money in my pocket as a college student and having a bit of fun on the weekends.
Okay. Well, that's fair enough. Money is motivation literally for everything. But I like your approach. I like that you took your time to research on the industry. You took your time to kind of get to identify the partners in that particular industry. So you started the company and, everything is going well for you. What was the first student like? Because I know you probably have had a bunch of students. So what was that experience when you had your first student come on board into the program?
So the idea to even bring on students was something that I wanted to find more people like me. And I knew that a lot of people were interested in, how to start their lives, how to really get moving in their careers. But I saw that if I could get them interested in the stock market, not only could I find a customer that I taught something to, but in 5, 6, 7 years down the line, I'd have a customer who had not only cemented their lives, but now was earning, upwards of $100,000 and, was well into their career, could have become an executive and can become a much better business partner. So the student aspect for me was casting a wide fishing net, right? Everybody would want to learn. We were in a college environment. Everybody wants to know more about this thing, and especially if you can tell them that, hey, that dollar in your pocket could tomorrow become $1.50. Because the day after that, upwards of $1.75. We'd start growing, and I saw this growth as, if I take this student today, when I come back in 5 years, well, I have an executive who can allocate, thousands of dollars to the portfolio. So when I took on my first student, it was very rough and tumble. I am naturally very inquisitive, so I can dig down a deep rabbit hole. But when it comes time to pop out of the hole and explain, this is what we did today, it was a challenge. And so it wasn't until I sat down and got the feedback and learned that when you bring someone into the stock market, you don't need to dig them into the FDA and the biotech and the pharma. You need to dig them into understanding assets as a whole. Understanding that no matter what we do today, a dollar put into the stock market will more than likely, I can't make guarantees in this business, but it's almost 99% a dollar put on your stock indexes will come back as a higher value dollar than it would be in your local savings account. Mm-hmm. And that's the approach I took from it. We took the approach that we should compare what the stock market can do for you over the long-term trajectory mm-hmm. instead of the nitty-gritty details of how individual stocks move. Because if you start to see the pathway, mm-hmm. you're more likely to stick with a teacher who can show you a pathway instead of a teacher who can bog you down with articles and letters.
Yeah, that's right. Yeah, that's incredible. I remember being one of your students, mm-hmm. and it was, at first it seemed like it was one of the most challenging tasks. There was just too much information, and with time I got to understand that it's sometimes the principles are the same. Mm-hmm. The game may be different in another country, but the principles are the same across the world. So I think in a way, over time I got to kind of understand what it all means, and it kind of got me curious to even discover more things on stock market. So how many students have you had so far? Since the time you started until now. Has the world or has your community kind of accepted the concept of stock market as a way to kind of build retirement or things of that nature? Has it changed the narrative from the time you started until now?
I think what has changed the narrative more in my favor than anything mm-hmm. is inflation. Okay. And inflation is a scary word because having less money when you get the same paycheck is a scary concept to understand. Yeah. And when we got to ways to combat inflation, investing is a very easy way to combat inflation mm-hmm. by turning your current dollars into more dollars at a rate faster than the inflation rate. Mm-hmm. So inflation was a big motivator, and I saw the number of students jump to over 25 plus students during the pandemic alone.
Wow.
And moving forward, I think I've seen a lot of acceptance to that mm-hmm. because another negative thing that really brought people to me was the fact that housing and housing affordability mm-hmm. got to where it is today. The fact that people can't go out and flexibly on their own save for 2 to 3 years and buy the real estate and buy the land that their grandparents and their parents had taught them so much about mm-hmm. had them itching to, well, I might not be able to afford the full plot of land, but what is something else that I can get into? Mm-hmm. And as you can see, the second thing following land and investments is the stock market, building a portfolio for yourself. Mm-hmm. That can be, the land in your portfolio, that you can buy pieces of real estate. You can accumulate rent income mm-hmm. of someone else's big land project through your own portfolio.
Yeah. Well, that's pretty elaborate, and I can attest to that. When I was trying to make a huge purchase, mm-hmm. one of the key things I had to look for was the interest rates, mm-hmm. and I actually learned that these interest rates fluctuate from time to time, depending on the different factors. It could be political, it could be social, it could be economical, like literally anything. A war mm-hmm. somewhere away from our country could potentially affect our gas prices.
It's all connected.
So by going through his class, I was able to understand why things happen and what steps I can take to kind of prepare for either a high or a low, mm-hmm. Depending on all of that. So what is the day-to-day like in Lynn and Jade Company? Like what is the day like when you get into your office? Like how does your day start?
My day starts with a motto that we say to ourselves almost every day. And in the market, you can be right or you can be first. Mm-hmm. Now, being first is like any runner. You have to prepare. You have to have done your stretches. You have to have your shoes laced up and ready to go. Mm-hmm. And our stretches include when you wake up in the morning, you check where are the bond yields, what is the news of the day. if you hear that, oh, there's a new geopolitical conflict and oil flow has been interrupted, well, then you look at the chart of oil, not because you've taken a side in the geopolitical conflict, but you know that no matter what happens, oil prices will be affected. It's having your screens in front of you, like a runner ties their laces. You have your brokerage account and you have your bond yields on one side and you have your commodities on the other side, and you see, oh, what did the president say? What is he planning to do to this country? What is he doing in response to this and that? Oh, well, you see the market is pricing in, oh, everyone wants safety today. Yeah. They're going towards gold. So the day begins with taking in the news of the day and seeing how the news of the day affected, the assets. And if you find a chance, well, you can either have been right, or now that your shoes are tied up and you're ready, be first.
Wow. Wow, that's incredible. So you basically have to be on time, and I know we have different time zone from when the stock market starts. So I'm assuming you're on the Eastern time zone.
Yeah, no. So luckily, thank you for my parents for moving us to the East Coast of the United States.
Yeah.
I had no say in that, but I am luckily in the time zone of the New York Stock Exchange. Almost, the world's biggest stock exchange. Yeah. So if there's anything, thank you, Mom and Dad, for putting me in the right time zone to succeed.
Yeah, that's true. So I know when I was coming in on board, of course, as a student, I first went through the program, and then after going through the program, I invested in your company. And I know there are certain things that you had to do. So how do you determine your clients' risk tolerance and investment objectives before they come on board to your platform?
So if you can recall to the first day as a student, the first thing we had you do was take an assessment. And in that assessment, I wanted to get your view of the world. Are you someone who lives on the cusp of the day-to-day? Do you need to just make it through every day? Or have you seen that another day is coming? I will not only be here for my next birthday, but I will be here for birthday 30, I will be here for birthday 40, I will be here for birthday 50, and so on and so on. And that lets me determine, what are your needs? Are you someone who can invest today, but need it all back tomorrow because you had a thing go on in your life? Or are you someone who can invest today and understands that, on his 30th birthday, he would like to reevaluate his life, shift his investments, pull some money back into cash. As he gets older, are we going to shift things into more cash so you have more tangible assets? Or are you someone who wants to relentlessly grow your assets until the magical day where we all dream that we can hand our boss the letter and say, thank you for everything, the working is finished, it's time for the living now. Yeah. So you have to find out what your client knows, how they view their life, and how they view their objectives in the coming years.
Yeah. So basically, everyone has to go through that test.
Everyone has to go through that test, because if you don't take that test and you write me a check for today, and you come back and you want it next week, well, we're going to have a bit of issue, because the shares I bought I'd like to buy shares on the downturn so we can be here for the prosperous times in the future. So that gives me, and of course there's clauses in your contract for how long you are to be invested and such. Yes. But understanding you as a person more lets me build your allocation in the portfolio.
Yeah, that's about right. So in terms of your strategy and style, what's your investment style, and how does it differentiate you from other portfolio managers?
So what differentiates us is we're not your run-of-the-mill index tracking. We take that existing pile of companies in the S&P 500 and we go across all the sectors, whether it's your high-flying technology companies or whether it's, the truck drivers delivering produce to your Walmart. They have their own company, or whether it's, the miners in the ground pulling the earth out and literally monetizing it. We take that entire view and we try to separate the winners from the losers, right? In the time where where we are in 2024 today, where you hear things like semiconductors are the new oil, well, that gives you a clear indication that, hey, if I had $100 to give to every company, maybe I'd give my oil companies $50, give my semiconductors $150 using the surplus from the oil companies. So our approach takes a look at the whole market, separates it into where our growth and our future is going, because while they tell you diversify, diversify doesn't mean giving everyone the same amount. If you see stocks as your children, and you know one child is running and in this race, he's out of the gates the fastest and the quickest, well, you'd expect him to come across the line first. You wouldn't expect it, and so you'd pour more resources into that. And so while we maintain a view of the whole market, we strictly separate our losers, and we take our money from our losers and give it to our winners. And as we come back with profit, we don't distribute profit evenly, we stick with our winners.
Yeah. So in the same line, can you provide an example of a specific investment strategy you have successfully employed in the past?
So a specific investment strategy we employed in the past was the oil trade. I don't know if you remember, but there was a period during the pandemic where oil went into contango.
Yes.
And in this situation, oil was worth less than $0 a barrel. That was a crazy time. When in your life could a barrel of oil that the world has run on for so long be found to be worth $0? Yeah. And in this situation, on the way down, everyone couldn't get rid of their oil fast enough.
Yeah.
And in this situation, we saw that, oh, well, we still live in a world where we drive cars, we're going to need power, and I'm fully supportive of the renewable effort, but I also know that you can't install solar panels everywhere tomorrow.
Yeah.
There's going to be a bit of heating and gas in their homes. And so we saw this opportunity not only as a chance to find these losers here, these which were the oil storage companies, people who had massive oil tankers floating off the coast, and we bought their stock up very cheaply, because when oil goes to $0,
yes,
anyone with some sense would buy as much oil as they can,
yes,
store it, because as soon as that oil comes back to $10, $20, $30 a barrel, they're going to need to sell it again. Thank goodness they did. And the trade paid off wonderfully in that situation, because while, of course, the world was shutting down, there are some essential needs that you can't shy away from.
Yeah.
And so this strategy of keeping an eye on your losers makes sense, because we were ready to go. We knew who had been taking the most losses, but we knew what these companies were at their core, and why this situation could quickly turn a loser into someone running to the front of your portfolio.
Wow. So basically, when people fight out there, you profit.
Yes. When people fight out there, we profit, because there has to be a winner to every fight.
That's true. So.
And if I was going to do anything, I'd rather not have my bets on the loser.
Yeah.
And even with your favorite boxer, when you saw Muhammad Ali get into the ring against anyone else, you had your money on Muhammad most of the time.
Of course.
Until the day he got knocked out.
Well, that's interesting. So in terms of your performance metrics, how do you measure the success of a portfolio? What performance metrics do you prioritize?
The most common performance metric, of course, is your return on net assets. That's a great performance, and here at the Lynn Jade Capital Group, we try to draw our line at 15% year over year. We've been drawing that line for over 5 years now, and I've missed it on 2 quarters. But the reason we have such a high line is because we feel that this is what we can get from our strategy. The fact that we're not holding on to our losers as they drag us down and jumping into our winners as they keep us up gives us that we can come out to about this line every year for our clients. But a secondary portfolio metric that is very important to us is our dividend. And increasing our dividend is something that we have met every quarter, because we're always looking to take our profits and buy back into more shares or into cash paying dividend. So a great example of this is recently Facebook announced their first ever dividend. Well, we had always seen Facebook as a great company, but when they announced their dividend, it was a remarkable day for us because what had been such a growth and winner and allowed us to take so much profit was now something that had shifted itself into a core holding, because not only was it still growing, but it was actually paying out cash every quarter. And we believe that if you can focus in on your dividend and keep growing, you can unlock a new rate of growth that is not just, the green or the red line. You can unlock a check coming to you every quarter that lets you go back and get an even better green line.
Okay. Well, that's incredible. So can you share the history performance of the portfolios you manage, especially during the challenging marketing conditions?
And so I'll start with the quarters where I missed my 15% threshold. During the great sell-off of the pandemic, we were performing at about 8%. And in this 8% period, it was because we believed in our core holdings. Even though our core holdings were being sold, we continued to hold on to our positions because we had found businesses that had proven their business model. And while the customers were gone because the pandemic was on and no one was shopping and everyone was inside, we didn't give them more money. We instead decided to buy different stocks, but the wins were not enough to offset losses from positions that you had set in before anyone knew what coronavirus was. And so we missed our mark, but we came roaring back and actually exceeded our 15% into our almost 22% return on the year of 2023. And that was remarkable for us because, we were getting close to a point where even for risk tolerance measures, we have to cut these positions. And though the theory hadn't changed, the status hasn't changed, when you're getting to a point where over 20% of your portfolio is generating a net loss and starting to drag down other positions.
Yeah.
And so consistently after that, though, we have found that our 15% year-over-year net return on assets is the way to go. And keeping this goal in mind, I think it's a place that gives us the optionality of the market.
Yeah. So I know every business usually comes with its own risks, and Lynn Jade is not an exemption, right? So when you talk about risk management, how do you approach risk management in your investment strategy?
In our investment strategy, we have an allocation to cash. Okay. And we don't think of cash as simply money in a savings account. We think of cash as 3 to 6 month treasury bonds. These bonds, of course, are, one of the globe's safest assets. We're literally believing in the U.S. government and its ability to function and pay back its debts. When it comes to risk management, that is our baseline. If I do not see an asset that can return above the threshold of the going bond rate, I simply don't buy the asset. I may have a theory of it. I may have done the research. The company may look good in an earnings perspective for the future, but if worse comes to worse, you cannot beat a bond, you are not a worthwhile asset. So establishing this baseline keeps things, it's a hard stop. I can keep the science, I can keep the research, but until you can outperform a bond, not a worthwhile use of free cash. Yeah. I'd much rather, take the return of a 3-month bond, come back to you in 3 months, take a look there.
Okay. So what steps do you, for me as your client, okay, what steps do you take to protect clients' portfolios during market downtimes, for instance, during the pandemic?
So in that situation, we have, so if our companies have turned and are now yielding worse than the bond, we will take a stop. Because due to the facts that, this is a compounding marketplace, a simple example is if you start with $100, if your bought in on January 1st to the stock market, you had $100 and you lost $50. Well, that's a 50% loss. But now, thinking about it, you have $50 left to invest from your $100. Not only must you make back your $50, but it is not as simple as making 50%. Making 50% on your $50, you made $25. So you have to have a max drawdown. Now, our max drawdown is around 15%, but that's because at around the 10% level, you have to, that's when you lose that one-for-one correlation. So if you ever lost 50% in the stock market, you'd have to make 200% to get that money back. So our $50 would literally have to double for us to have that original $100. So when we get down to it, if our assets have come back to our flat line of their worst in bonds, we will only let them dip 10% lower than the going return rate of bonds. Because at that point, we know that, we can take our money out, wait for another opportunity, and know that we only need to make 10% more to return our value back to that of, the going government treasury. And, so going in that situation without a stop loss, if you ever let yourself lose 80% of your value, you'd have to make almost 400 times your money. And finding a 400x trade to save your day is not the business I want to be in.
Yeah. So it's more about, you have to really put a lot of factors into consideration. And of course, I've heard you talk about the government. Are there key roles that our government or any other government plays in regards to making sure that we as the citizens or we as your clients are safe during any given time of downfall?
So the government will never step in and say, stop losing money in the stock market.
Okay.
Of course, our losses are our own responsibility. But the government gives you great opportunities, and the U.S. government is positioned as the modern world standards. So having the dollar as the global currency gives us a great option. When you put your money in U.S. dollars, you get a 1-to-1 for every dollar you put in. That's key backing there that draws a flat line. I hate to say it, but in medicine, a flat line is the worst thing you can have. But in investing, a flat line means that you're not losing. Now, it's important to start at a point of not losing, but you have to keep going, because no matter where inflation is, it's eating into your flat line of not losing.
Okay. In terms of asset allocation, how do you determine the optimal asset allocation for a client's portfolio?
When it comes to determining asset allocation, it goes back to our strategy, right? I have the whole marketplace. I split my marketplace into winners and losers. Now, I want to give my clients more than half of their portfolio to our winners. I can't only pick our big company winners. I have to pick medium-sized companies that are winners, the mid-cap companies, and I have to pick small companies that are winners. And that's where we find almost 50% of our client portfolios. Now, there's a remaining 50% of our client portfolios. I need to establish my flat line on bonds. I take 20% of that, I put it in bonds and government-backed assets. That establishes my flat line. And so I'm remaining with about 30% of my portfolio. I like to think of this as my place to take asymmetrical risk. And when I say asymmetrical risk, it's something that goes back to my oil contango trade. In this situation, we know that the bottom is in. Oil will never, it's hard to find a negative asset, something where people would pay you to get rid of it. And so in this situation, we have about 30% of the portfolio that our research department sends me new ideas, and we have to run those ideas through, do they meet our bond threshold? If they do, what is the max return that this can go to? And sometimes we miss our mark on our maxes. For something, most recently is NVIDIA. we didn't think this stock could run to what is that? It's at $700 today. We had our max for this stock somewhere in the 500s. We missed our mark, but we also took our profit all the way up to 500. Yeah. So this was an asymmetrical return for us. Another situation of asymmetrical return was a company in the semiconductor space, AMD itself, where we saw that this company, on the day they announced earnings, they were spending a lot of money back into the company's research department. We also saw on the calendar that in December, months after their earnings, they had an event where they were to highlight new company products. Now, you're putting a lot of money back into your company, so you believe in your company. You're not just giving that money back to shareholders or the stock. You have a new product coming out. Well, these are two very positive catalysts. And so playing within our 30% of our portfolio that we had to allocate to asymmetrical returns, we bought shares of AMD, and as we dollar cost average, as the shares were going down due to the fact that, they were spending a lot of money on the company, people were not impressed by the margins, we saw that there was an event here that could catalyze in a new line of products in a very hot space in the market right now. Jump your shares up. And luckily, the trade almost doubled. I think as of our last check, at the beginning of January, AMD was almost crossing the $180 mark. And that gave us a great dollar cost average from when we were buying shares lowly post earnings around the $90 mark. And so this is, the place where your money is safe in our winners. We're always monitoring our winners, taking profit, and finding that we can come back to our asymmetrical winners in our 30% allocation.
Wow.
And while maintaining that bond line gives us a hard stop on, should any of our winners ever start performing less than our regular bond line, I'm sorry, you have to go. I will reevaluate in 3 to 6 months when the money from the bonds comes back.
Okay. In the same line of thought, can you explain your thought process behind adjusting assets allocation in response to the market conditions?
So when you meet a new market condition that is unexpected, and of course the most recent one, I'd say not in response to COVID, because we're starting to move farther and farther away from that, but in response to the Federal Reserve hiking interest rates. We're a new firm. The last time interest rates were hiked were in the 70s. I don't have a single member on staff that I can say was proficiently trading equities in the 70s. So we went into all bonds. And in that quarter, I didn't want to hear about a winner or a loser. I didn't want to hear about asymmetrical returns. I wanted to take the time to learn about hiking cycles. What happens, And they say the past is no indicator of future performance, but the past is definitely a great place to start your learning before you do any speculation about the future. And so in this situation, we were all bonds, and bonds are, almost like cash equivalents to us. So while we're returning, a decent amount of money, and that's why we missed our mark that quarter, but we still returned a net positive because the bonds paid out for us. And we took the time, and as we became more familiar with what the Federal Reserve was not only saying, but historical comparisons of what happened the last time they did this, what industries were set to benefit the most. Turns out some of our high flyers, some of that fuel in the fire that got them going so much was cheap interest rates, where you could borrow money against earnings that you wouldn't have to deliver on for 10 to 15 years. When interest rates are going up, you can't borrow so freely on a future that no one is sure of how will play out yet. So in these situations, I like to always run back to my bond allocation flatline.
So we have touched a lot about finances. We have touched a lot about the processes that you make, as a portfolio manager. And now we are coming into your research process. What is your research process for identifying potential investment opportunities for your clients?
Well, I'll start by saying that over 5,000 stocks. That's a lot. And what you have to start with is, where am I going to be? How long am I going to be there? And don't you ever dive in without a goal. So, where am I going to be? What sectors of the economy do I not only know about, but am I comfortable being invested in the case that I'm wrong? Not just something you heard in a flash of the pan one time, or you caught a glimpse of someone making money here, and you'll never see that person again, but you heard that times are booming here. So that starts with, of course, our experience. As stated earlier, a lot of experience in the pharmaceutical and the biotechnology space. I have wet feet in there. I know what I'm doing there. A lot of experience with oil, geopolitical consequences of oil. Yeah. And they say if you can trade oil, you can trade most things. But I like to stick to what I know still. Yeah. And a lot of experience in the technology and technology services space. Yeah. That's just because cohort and, experience I've gained in the space. And so we start with that outlook of what sectors we want to be in. Once we've chosen those sectors, we of course establish, we go back to our 15% baseline. Is this a good time in the market cycle where we can find that? There's two times you can find that. You can find that selling against, shorting the stocks. And you can find that maybe once the stocks have found their bottom, buying them again. So you always have to know, what is my plan? What is my objective now that I know where I'm looking? And next is simply the man hours and the paperwork. Of course, mentioned earlier the SEC's EDGAR filing system. Before you invest in a stock, read their most recent earnings, but not just their most recent earnings, the two before that one, as well as the analyst estimates of the next one. All your big banks provide analyst estimates, from JP Morgan on our side to even Barclays on the other side of the pond if you're looking at stocks in a different region. This lets you know what is not only being expected, but is there a chance that they can deliver on similar results of the past? Because, of course, the past doesn't predict future performance, but you have to be a fool to not look at the past ever. And after that, we then get into the company's investor relations board, right? Thank goodness for the rule of law in the United States. There's things you have to disclose as part of your company's operations. Reaching out to your company's investor relations, and it's as easy as sometimes sending an email saying, I'm with the Lynn Jade Capital Group and we're just trying to get some information about your company. Sometimes, you have to reach out to alternative data sources. And these are, research firms. So, of course, one of our favorites in-house is the Morningstar research firm. We pay them, of course, a subscription, and they provide us with the research that their analysts have gone in depth with as well. And you have to aggregate all of these things to know where, what I want, and this is everything that I know so far, to find a price point. Okay. This is the price point where you're comfortable entering whatever your trade is, whether it's on the long side or whether it's on the short side. But I'd say this in total should take no less than 2 weeks before you make new moves. And if you did the 2 weeks at the beginning, next time you come back, you have a base, you save yourself a week or two, especially on the information gathering front, because you know where the stuff's coming from.
Yeah. So I'm assuming your sources are usually are verified in that sense. And I know in your field, you have to constantly know what the market is talking about. You have to know what's the latest thing going on or things of that nature. So how do you stay informed about market trends and economic developments? Do you have particular websites you go to? Do you have news?
So this would be the part where I think I have to shout out the Bloomberg Corporation.
Yes.
Because what Michael Bloomberg built is your one-stop shop for any financial information. Yeah. Your Bloomberg terminal will not only give you the company, It'll help you spell it correctly if you weren't quite sure. It'll provide you an overview of the company's supply chain.
Yeah.
And then when other companies similar to that company do something, it reports on the entire group as a whole. And also on the geopolitical trends. So, we live in an age where news is biased depending on where you get it. The same incident on one side of the spectrum was good for us, perfect. And then on the other side, they're vilifying their opponents and such. But Bloomberg is, in my experience, the best place because there is no political affiliation. There's simply a market participant, market trends, and this is what's going to happen. Let's say there was a flare-up in the Middle East. Well, these are the industries affected, not necessarily what was wrong or what happened. It's what happened has happened. These companies were involved. These companies could see an impact. So something like that. So Michael R. Bloomberg has built your one-stop shop, and with things such as podcasts, a global 24/7 from all the markets, not just the New York Stock Exchange. As soon as that wraps up, Bloomberg Asia coverage begins. As soon as Asia wraps up, Bloomberg Europe begins. Bloomberg Europe then melts right into Bloomberg Americas, and it's just a 24-hour cycle. And when you hear something going on, run to your Bloomberg. See not only what assets are being involved, but what others, investors, and some of their opinion pieces are well researched. And they also keep an eye on new and upcoming things. So when you see of a trend there, start to dig into it. It may have a big impact and could have a big return for you one day.
Okay, and how is this Bloomberg terminal accessible to the common people? Is it like, do they have an app for it, or do you have a whole gadget just dedicated for Bloomberg?
When it comes to the Bloomberg terminal, I wouldn't recommend it unless you are deeply involved in the investing space. The Bloomberg terminal, of course, is not such a user-friendly tool. There is quite a bit of setup, and the monthly costs are running into upwards of $2,000 plus per month for the entire terminal and the entire space. And so, of course, this terminal comes with not only the software, but your fingerprint key card so that you can able to ensure that it's you accessing the information. Great thing about it is it integrates perfectly with several brokers, so you can actually complete your trades while you're in the terminal. Of course, everyone in the terminal has their contact information, should you need to reach out to anyone in there. But I think for the run-of-the-mill people just starting to getting involved, do what I did. I bought a $40 Bloomberg subscription in college, and I've maintained it ever since. And the great thing about companies providing this breadth of information is if you need more, they will provide more. And, just continue to explore and find your interests.
Okay. One of the greatest strengths I noticed when I became one of your clients in Lynn Jade was you are very great with communication. You always gave me updates on, my portfolio and how it was doing. And you also gave advice on some of the things or some of the steps I should take in order to grow my portfolio. But then for other people, how do you communicate? How frequently do you communicate with clients, and what information do you typically share with the clients?
So there is, of course, the careful regulations of speaking to each client in aspects to their portfolio and their terms, and speaking to the portfolio of the company overall with them as a part of it. But when it comes to communicating with clients, availability is the best ability. Being there for your clients at any time, because you never know when someone will hear something from their child about, why didn't we buy Bitcoin? You never know when someone will hear something from their child about the economy set to crash this year. You never know where there's something as simple as last year where there was 100% chance of recession, and here I sit with you today looking for what recession. And so when you're available to your clients, when they call, and within a reasonable amount of time, because if you call me at 2 a.m., you might not find me until the following day at 8 or 9:30 a.m. So that is the best thing you can give your clients.
Okay.
It's also the same principle with running any sort of financial institution, that if people don't know, they want out. I think it's very much human nature to keep what you have in a box in the closet or under your mattress. And so you have to be very forthright with their information. You have to be, don't ever make a client feel as if they're bothering you.
Yeah.
Because at the end of the day, I know I'm nothing but a kid with a wallet and some ideas without my clients. And you have to treat them with that level of respect of knowing that, well, yeah, congratulations. If you don't have clients, well, go open a broker in your own name, do your own thing, scale as you can. But my clients give me my ability to move into different sectors and different zones. Okay. And I have to respect them because it is with their backing and their physical dollars that I was able to do these things. And so it's a fact to communicate with your clients at minimum once a quarter. Because if 3 months go by and you don't know what happened with any of your money, you're not keeping track of your money, are you?
And you're not. Yeah, so that's something I would really like to appreciate, because most people, communication is often a very difficult thing to do sometimes, especially when you're busy, you have a full-time job, and then you have to balance all this, and you have your work and your life as well. So it's just too much to juggle. And I find it really admirable that you're able to keep in touch with all your clients and also keep up with what you're doing for yourself. So in terms of concerns, because I know there are clients who may have concerns here and there, how do you handle your clients' concerns or questions about their portfolio when they come to you?
So when someone comes to you with a question or concern about their portfolio, what you need to do is show them where their money is. If you can show them that, oh yes, you're coming to me because you've heard reports of a pothole, well, I can tell you whether or not that pothole hit us. I can tell you how many dollars you had and how many you're losing because you were there, and why were we there, what happened, what led us there, why didn't we see this pothole coming? Or you can provide someone with a lot of relief when you tell them, oh no, we were 3 miles down the road past this pothole. This was something we very well expected. So you have to be able to show your clients, this is your allocation, these are the stocks that we're heavily invested in, this is how this report affects us. And when people reach out to you to communicate about something like that, it's in reactive and in response of something. So that's why, it's very important for me, as we were talking about earlier, with my news sources, I have had a critical failure if someone is telling me about a piece of news that I don't know about. And if this is a client telling me about a piece of news and they trusted me to, be forthright and be the guy with goggles looking out for their money, well, I missed something. And the last thing you want is to be the driver that fell asleep at the wheel. Yeah.
Very dangerous for sure.
Yeah.
I wouldn't want to be that driver either. So nothing is for free. And I know the work that you do for us, there's usually some enrollment fee and things of that nature. So in terms of the fee structure, can you explain your fee structure, including any performance-based fees?
Now, I must preface this with saying that our host here has been a great friend and was jumped on with us at a very early period, so his fee structure will not be reflective of the fee structure of those coming to us today.
Okay.
But just to say, on that note, when we were starting out, we granted our early members a zero-cost management fee. Okay. Now, your management fee is, of course, that money that you take as the responsibility for taking the money in. That has nothing to do with performance. It's whatever size check you write me, you take a 2% management fee just for fund operations and such. Okay. You will waive that fee. This is a great friend. Yeah. And so moving forward, we will have a simpler fee structure where we will take a simple 2 and 30 approach, where that is, we will take a 2% management fee. Okay. That's our flat rate. So we will be scrapping our founder's deal, which was, a fee on your way out. So we will scrap that for a simple management fee on your way in. And then we will also institute a management fee, a performance fee of 30%, right? So whatever we grow within the portfolio, we will only take a 30% cut of that. You're entitled to 70% of the net asset growth.
Okay.
So saying you gave us $100, simple example is we grew it to $200. Well, we only have a 30% fee. So of the $100 that came in, we took $2, took that for ourselves as our management to keep our operations and our staff and everyone happy. And then we grew your assets past that $98 into $200.
Yeah.
Well, we will only take $60 of that will stay in-house with us.
Okay.
The rest will come to your portfolio, your growth.
All right. Are there any hidden fees or charges?
No, so there are no hidden fees and charges. I would say that fee structure I disclosed is, of course, only for our stocks and portfolio management.
Okay.
We have also expanded into private equity and venture startups where we, buy seeds of other existing companies. We work well with students out of the local college, NC State here. And it's a great school with a great engineering pedigree. That's also served as a hub for venture and helping students who want to start their own things.
Yeah.
If you can provide them with the experience and the connection to the leadership so that, they can focus on quality products or services without worrying too much on the back end of what is my tax compliance, what is my addressable market. We can look you up with the business studio so that you can form a landing page for your business to start to audition for customers, see what any feedback you're getting and such and that. And that is more on an individual basis because you must come to us and, if you would like a piece of these venture companies, we're in for longer periods of time because companies don't grow quarterly. Companies are a lifelong growth, and we must put you in contact with the founders and determine what is your allocation. And not only that, but we like to think of it as what can you provide to this company instead of just providing money because we have banking relations. We can go get them loans and checks and such and such. Are you someone who can contribute valuably in the field? Yeah. If I can connect any of my clients who is an engineer to engineering students looking to start their own companies, I've built a much better connection for them than to a checkbook.
Okay. It's pretty good to make sure that we don't have any hidden fees or anything like that.
Yeah, no hidden fees on our portfolio side and our venture side of things. Yeah. All fees are negotiated between you and the business owners and us as the firm.
All right. In terms of the market outlook, what is your current outlook on the financial markets and how does it influence your investment decisions?
Well, I'd like to preface this by saying that of all our viewers, this is not actionable investing advice for you. This is my market outlook, and you take it as such. I think on a more personal level, everyone should seek out a financial advisor and retain them for their own market outlook. But for me today, sitting here on February 6th of 2024, I have seen what some would call the beginnings of a new market cycle, where everything is going well. Unemployment is steadying. The Federal Reserve's next moves all seem to be cuts lower. But I also have been on a roller coaster ride of stocks from their October lows all the way to January. With some of my positions early, I think AMD itself had doubled. Now, what do you do when you're faced with this situation? You take some time, you reevaluate. So we have gone heavily back into bonds because we think bonds are a favorable place to be until the cutting by the Federal Reserve begins. Because, of course, the interest rates will drop down, our bonds will start to pay less. And so when we think about redeploying this capital, we want to redeploy this capital in companies that will see the best boost from interest rates. Okay. Now, if you run a company that was, very importantly, profitable, successfully weathered the rise in interest rates, now that you're able to borrow for lower, you have more fuel to a good fire. Yeah. And identifying good fires is the key right now. You must identify a company that is profitable, has solid leadership, and will benefit from the interest rates going down. Right? So this is a time for us to take pause, sell our winners, secure our profit, get a comfortable 3 to 6 month yield on our bonds. And as we come back, we're looking at those smaller companies that need to accelerate their growth. Apple will never have to come to anyone to ask for money.
Yeah.
They've sold enough iPhones in everyone's pockets that they have well enough in reserve. But those companies that are smaller, would look to tap the markets and are quality rated, you can find a company there that may just need, a couple $100 million to double their market size. And as soon as rates go down and they can find that borrowing at a comfortable rate, that's a company I'd love to be invested in. And so that's my market outlook, that it is time to take pause, reevaluate, sell your winners, and find them a new home.
Okay.
And make sure that new home is a stable home.
Okay. So in the same line of thought, how do you adapt your strategy to the changing market conditions?
I adapt my strategy by just adjusting allocations, right? There are periods like this where my bond allocation will jump up beyond that 20% because I'm very comfortable here. I am not yet ready to redeploy the capital. Now, when the bonds come good, you'll start to see our winners and losers across the broad industry spectrum. They'll get a little bit boost, but of course our winners will get a much higher boost than our losers.
Yeah.
So you have to be flexible and you have to be willing to admit that you are wrong. If you ever meet a fund manager or anyone who says that, no, there's no way I can be wrong, then you know that you're in for a market that at that point, the market manages your money, not the person.
Okay. So I know in terms of client fits, there are certain criteria or there are certain things that you look in a client and say, okay, this person will be a good fit for this and that. So how do you ensure that your investment, in terms of the client fit, how do you ensure that your investment approach aligns with the goals and preference of your clients?
So my investment approach and my clients have to fit together. The world is full of people, but I only have one investment approach. So the way I've built my investment approach is for the young professional, someone who has, 15 to 10 years before they retire and need those solid cash assets to live on. So if I ensure that I've built a balanced portfolio that's filled with, stockpiling the gains from your winners into tangible assets that are cash producing, then I can make sure that I have the time with my clients. And so as you did in your initial client interview was an assessment. We assessed what were your goals, what were your expectations, where are you in your career, what are you looking to achieve? And if I can keep filtering my clients through a better and better system, not only can I have one perfect client mold that I can continue to shop amongst billions of people around the world, but it lets me wean out what would be a dangerous client, maybe a large client who only needs their money invested for 3 months. That's very troubling for me when I could have a larger client who has, years of investing and we can build a relationship and partnership into different things.
That's incredible. So it's important for these clients to have at least some tenure ahead of them in terms of their career and all of that, so you can create like a projection of how much they'll be able to bring into their portfolio. When you talk about I know for this kind of businesses, you have to be qualified or you have to go for certain credentials. In terms of your professional background, what is your professional background and how did you get started in the portfolio management business?
So, of course, things changed in my career after the pandemic. And then I tilted over to a customer service role in Fidelity. Fidelity, of course, is a large brokerage. Fidelity Investments is one of the cornerstones in our investing industry. So here I started in customer service role and acquired my security industry essentials license. This is just, these are securities, these are the products, these is the marketplace. This is the basics. I followed that up with beginning my Series 7 over at Fidelity, but continuing it over as I moved over to a more customer-facing role at MassMutual. So I completed my Series 7 certification. And the Series 7, of course, is, the blanket government certification that you need before you are able to sell any stock, security, or services in this space. So I've acquired my Series 7, but I also work with partners who have completed their CFA. So my original professor went back to and completed his CFA certification. And I also work with a legal team over here with Matthew Campbell in Raleigh, who is a CPA. And he not only handles some of the legal aspects of making sure, we dot our I's, across our T's, our tax filings are correct, we make share purchases, they're in a legal and compliant manner. But he also helps with some of that, what are the numbers? What numbers are we submitting? What are we submitting to the IRS for our profits and losses? What is our capital loss carryover? Things like that. Okay. So it's important to, before you do any of this work, you ensure that you're working with an accredited advisor, and then that the whole team is accredited, because it's not just a one-man show.
Yeah, that's incredible. So for those who may not understand, maybe you could clarify these abbreviations if you CFA.
So the CFA is the Chartered Financial Advisor. The FINRA Series 7 is, of course, your license to sell stocks and products. And your CPA is what's it?
Certified Public Accountant?
Yes, Certified Public Accountant. Yeah. Sorry about that one. And, these are the important certifications that cover every part of the business, from the actual day-to-day stock transactions to the stock research and making sure that your research is valid and credit for should the SEC ever come looking and see who signed off on this research. And then the public accountant to make sure that these are my books. These are what my books say, and this is the money in the corresponding accounts for these books.
Okay. I know the government has a couple of regulatory issues, or rather points that they want this business to have. When you talk about regulations, how do you ensure compliance with relevant financial regulations and ethical standards in your operations?
To ensure this, I say, is have another set of eyes. Because you can put together the numbers, you can put together the documents, but thank you for the people over at Matthew Campbell's law firm that review everything that I submit to them. Before client communications are sent out, they're reviewed, and disclosures are, reviewed, and new contracts are reviewed and sent out and edited as well, because they have that authority as well. And so you have to keep on top and make sure your legal team is always paid, because they protect you more than the analysts who are looking to find new stocks and investments. Okay.
That's pretty elaborate. So you have to basically work with very key individuals in order to make sure that you are compliant with everything. In the same line of thought, have you ever faced any regulation issues and compliance challenges in your career? And if so, how did you address those particular issues?
So luckily, we have never faced any major regulation issues. I do know one instance early on in the beginning where a contract for a new client was sent out without a proper disclaimer on it. But of course, the procedure of that was to then void, and nothing was signed or completed yet. So we had to, this is the importance of a second set of eyes. No one man in any company should be able to send a document out to a customer without anyone having reviewed or have knowledge of it.
Yeah.
And so it was important that we voided that contract and re-signed it along with the proper disclosures and proper, individuals were present to make sure that modifications were made correctly.
Okay. Well, that's incredible. I'm glad that your company is in compliance with the law, and I think that also protects your clients' information and all of that. It gives us the confidence that if we invest in you, then our investment is safe and that nobody is going to breach or anything of that nature. Now that you've come all this way, I'm sure you've interacted with so many clients, and you've looked at Lynn Jade Capital Group, and there is a future for this company. So when you talk about the future, what does the future look like for Lynn Jade Capital Group?
So the future for Lynn Jade Capital Group is heavily aligned with the future growth I see for myself. I think, as I mentioned earlier, there is venture companies that we're working with small founders to get going on.
Yeah.
And one day I see myself ringing the bell at the New York Stock Exchange. And to do that, I'd have to take one of these venture companies and continue to nurture the growth of the founders to a big enough addressable market that we can have a successful IPO roadshow. And should we IPO and launch on the New York Stock Exchange, it'd be my magnum opus to ring the bell to start the day of trading.
Yeah.
And that's where I like to see myself and continue growing. And within the firm, I think you become one of the stars in this industry once you reach the levels of $1 billion under management.
Yeah. Well, that's great. I'm sure whatever dreams you have, you can surely achieve it if you focus on that.
Thank you.
I don't know what it feels like to ring the bell, but I know it's something that is very significant in that sense. So, I mean, looking at all the things you've been through, coming all the way from Kenya, you're in the US. I mean, as a young person, there are so many challenges you've been through to a point where you are and to achieve level of success that you have right now. I'm sure there are people within the community or your parents or people who supported you along the way. And there's a guy out there, there's a lady out there, there's a young boy out there who's looking at you right now and they're like, man, I want to be like Dean. What message do you have for someone who wants to follow the same route you followed in the finance industry?
This route is a route filled with moments of doubt, questioning yourself. Am I doing the right thing? Why am I not succeeding yet? And to overcome this doubt, the best person you can talk to are the people that you feel are more successful than you. The people who you feel have walked a path that you want to walk on. And whether it's reaching out to these people through a cold email, anonymous message, you want to connect with these people however you can. Of course, a warm handshake would be everyone's choice. But you want to get them talking. And you want to get them talking about their life. You want to get them talking about what went wrong in their life. Because everyone who's ever succeeded at anything has at least one failure. Find out what it is. Find out if they were to do it again, what pitfalls would they avoid. Find out, because the thing about success is if you can do it again, you do it bigger. Find out how and get started, because they're going to tell you everything that they've done and they'd love to share a path with you that they've walked.
Well, thank you for that. How can we find you? Can you share your contact information and things of that nature too?
So, of course, we're simply found at lynnandjadecapital.com. That's LYNN and ANDJJADE capital.com. And at the bottom of our page is a contact us page that corresponds directly to our incoming inbox. And I myself can be found at d.ogot, d.ogot at lynnandjadecapital.com. So if you have any questions, ping me, follow up. We just want to talk some more.
Well, that being said, our viewers, I would like to thank all of you for staying with us. I know it's been a long financial lesson, but this is just the beginning. There are more series to come, and if you'd like to, focus on any kind of financial literacy, Dean is here. He's willing and he's very much able to help you. And I, of course, will want my my commission.
Yes.
Yeah, but
Don't
anyway.
worry. We'll work that out without it being a hidden fee.
Really?
Yes.
Well, yeah, thank you all for coming, and let me know what kind of topics would you like us to talk about. What kind of people do you like us to have on this particular platform? And all of us should grow financially, and it's always good. And as much as we take care of our health, we also need to take care of our financial health too. Mm-hmm. Yeah, and so that's it for today. Thank you all, and see you on the next episode.
Thank you, everybody.
Thank you. All right. Good one.